Welcome, guys. Welcome back to another episode of Price Targets, and we're gonna be back for a while. I think we're gonna restart the series, and that means that I do believe there's a good chance that the market is gonna turn back bullish. So, bull market back on the menu. Um, I think we're gonna do these in a live stream format going forward. Not today because I just need to train a little bit on that and experiment with a few things, but I created this nice layout. Today we're going to talk about whether I think we're in an extended cycle, um, and I'm going to focus it around equities and AI as the leading business cycle theory. So I think you know Bitcoin is at a point where it's about to break out. AI is going to start bubbling from here on out. There's a bunch of IPOs that are upcoming for SpaceX, Anthropic, OpenAI. Um, we're going to try and frame our market outlook around how this historically has created supply overhang and in what time frame we can expect that. And then we're going to try and extrapolate that onto the S&P 500 chart. Um, and I think it gives us a read on the next 18 to 24 months on a bigger time frame. And then obviously I want to end with how BTC and other privacy coins will have a mode within the AI evolution that we're looking at. So um, we're just gonna jump into the screens. The funniest thing to happen is this chart has been going around for quite some time, and it's basically saying that at a certain point of price to earnings ratios, if we look at all past historic data points, you can expect a neutral or a 10-year negative return in the market. Now, obviously, we're at that point. This chart is from sometime in 2025, and we're we're in this we're in this cohort. But 10 years is a long time, a very long time. If we look at, and yeah, I'm going to tell you, I recorded this entire thing already once, and then somehow halfway through, a second audio source came into the freaking thing, and then it was just echo, 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 echo. Um, from a technology perspective, it's very much like the dot-com bubble. The only thing that's different is that it's very concentrated into only a few companies, the AI companies, and they're actually making revenue and their earnings are growing and margins are growing. So it is sustained to this day. But if you look at the larger comparison with the past, what we can see is that we're you know, in this kind of territory right now where we're going way out of the logarithmic trend. And the funniest thing that happened when we talk about the profit to earnings ratios happened actually during the last sell-off of the S&P 500 in March, is that, and this doesn't often happen, but the PE ratios dropped not just because of price dropping, but because earnings expectations are rising. So analysts now think that we're going to see growth into the end of the year, and then growth after growth, and then keep a steady baseline back to 10% by 2028. This is important. It's optimism fueled by, something that's actually sustainable because the revenues are actually pretty good right now. So it's like we're going to get to a point where that's going to get overheated, but we're not there right now. So the S&P 500 is breaking out as you can see here. And that is just because the expectations of the earnings are becoming better and better. And at some point, that's going to be too much. But enough of that. 3 IPOs: SpaceX AI, OpenAI, Anthropic. And the first thing to know is that I think there's going to be 180 days of lockup expiration, and then that supply is going to start hitting the market. SpaceX is probably going to be in June. I don't know if it's going to get delayed or not, but that's the latest I read. And then OpenAI and Anthropic are probably Q4, maybe early Q1, sometime 2027. And I've done some research, and my expectation is that the point of gravity of the supply of these IPOs is going to sit 12 to 18 months after their IPO. So let's say 2027, like the end of 2026, beginning of 2027 is going to be where the majority of the IPOs will have concluded, or have been happened, and then we have 12 to 18 months after that, right? So this is October. That's when I think we're going to get our first hiccup. But the bigger cyclic hiccup I'm looking at is towards January 2028 into the middle of 2028. And at that point, the biggest question will be whether AI is driving the prices of services down so much, and whether the revenues are sustainable, and whether the demand can, stay. So there's a possibility that this is going to turn out very different to what we've seen in the past with IPOs. And my calculations for 12 to 18 months is based on the past. There might be so much actual benefit of these companies and so much revenue being driven that they become like massive, massive. And this whole cycle gets extended even further into maybe 2029. But that's, I would say 12 to 18 months is probably a good measure, right? The other thing that I want to point out as to the difference with the .com bubble. .com bubble was like so many different companies, and the expectations of all these companies going to make revenue was ludicrous. And there were only a few winners. So there were a lot of like not really fake companies, but they kind of die. We're talking about a much smaller, concentrated market in this specific instance. And on top of that, the internet was cool, like super cool. But it existed already for a long time. So it was the maturity of the internet, and then actually the services being built on top of it that fueled a lot of, getting into the mainstream, that fueled a lot of that bubble. It was not really a national security risk. Internet was already old, and it was already being used, AI is a national security risk. If we assume that we discovered an algorithm that basically functions the way our brain functions, because our thinking gets better if we minimize error prediction. Like if we improve error prediction, we get better. And so our brain has this way of thinking where it predicts errors and it tries to minimize that. And by doing that, we start to think better. And AI is basically also like token prediction. So if we assume that we give this thing more resources and we improve its error rate, it's going to get smarter, and then it gets more bandwidth, and then it gets even smarter. We're going to get at a level where AI is kind of scary, where you as a government will have to want to be the best in the world. Otherwise, you're going to get screwed over by other countries that will hack your shit, that will develop new technologies way faster than you do. So it's national security. So there's a lot of things that need to go wrong, need to go right. It's very much akin to the Manhattan Project. Uh, when they were developing the nuclear bomb, um, and so they're gonna support that market. That market must succeed. So even if there's like cracks in the market, in the liquidity, whatever, they're gonna fix it as long as possible until they reach this AGI, ASI, whatever, um, if they can manage. So back to these IPOs, if we enough, yeah, I'm so sorry because the last time I recorded this, I was putting all these lines on the chart in real time, and we had this cool thing where I said that compared to past bubbles, there is room to go to like 11,500 S&P 500 before it kind of pops. Um, and then I put these two lines on there for the gravity point of the IPO supply. And then I drew this line, this line, this line, and this line into that direction. And then basically what we're seeing is that it's not such a crazy idea to end up around there at a pretty steep valuation. So S&P 500, I think it's going to get a hiccup in like around October, go down, and then it's going to shoot up further into next year. And that is, AI is going to change so much. The things I can make today are crazy, and like everyone has access to these tools, so it doesn't make me like a superhuman, but the things I can make at the speed I can make them, it's probably like 20x, like so a lot of things are about to change. So that probably leads us into this whole war, Iran, Venezuela, Ukraine. It ties into the AI story because they are resource wars, and these countries are trying to reshape the ownership of the supplies required for the Manhattan Project. Like Ukraine, we talked about it in 2022. I already mentioned it's about chips for a large part. There's a bunch of gases being produced in Ukraine that are required for producing chips. But a lot of LNG there, and also a lot of food production. That might be related to the shift of the magnetic field in the world as well. I'm not really sure. That's a whole different rabbit hole. But Iran for sure is a resource war. It's about controlling who has access to everything required for chips, chips, right? And energy for chips. And then Venezuela, same story. So AI will drive the cost of services down. This will be a battle. It's going to keep inflation down whilst we have this battle for resources. And I think we should look at oil, right? Because there's this notion that the world's going to go to shit and oil's going to go to $300. But I just want to show you what the market thinks. The S&P 500 is breaking out. I think it's going to go much higher, right? Then the Brent crude futures forward curve. You can see that the market's basically expecting Brent to be back at like $80, $85 by the beginning of next year. Same story for American oil. Slightly cheaper because there's probably going to be a remaining premium on oil in Europe because, Europe is a special place. Um, and then everyone's saying, "Oh no, Jack, look, it's a paper market. You can't take it serious." And then we need to look at. I want to introduce you to the Brent dated Platts, the dated Brent. And this is basically the market where you buy the physical delivery. This is actually what you pay to get it physically delivered. And TradingView is showing it as the premium on top of what you normally pay on Brent. So, for example, here it's saying $7.58. You pay $7 something to get your oil on top of what the Brent is costing you. But if you actually trade the full thing here, you would actually pay this when you add them together. And then you actually get the physical delivery of your Brent for 115 for the current contract in front. So the market, and I have to kind of put this between your ears if you're a doomer, is expecting the oil prices to go back down significantly. And not just that, like, I don't know, it's a $3 trillion market. And then on top of that, a lot of paper being traded in that market. So if the doomers are right and oil does go to 150, 250, whatever kind of crazy number, there's hundreds of billions of dollars in liquidations in that market alone, which is going to, trigger a bunch of banks that are going to fail. And then there's going to be spillover into every other fucking sector you can imagine, including equities, of course. It's going to be a massive black swan, but everyone's seeing the black swan. So please, Lord, it's, I think we're going to see a deal. And at the same time, we have the UAE exited OPEC. They're going to ramp up their production, which they cannot really deliver most of because the Strait of Hormuz is closed. But it's going to create dissent amongst OPEC. And on top of that, OPEC is going to increase their output. And then on top of that, every other oil producer in the world has an incentive to start producing more oil and start transporting more oil because, you get a good price. So, and then on top of that, there's a bunch of oil just waiting to be delivered. Bitcoin is trying to break out here, huh? On top of that, there's a bunch of oil waiting on containers and offshore supplies and storages and whatever. So there's going to be an oil glut, but there's also going to be a massive oil demand because we're racing for energy and producing chips and whatever. So oil is not going to not going to come back down to $60. We're probably going to lose some production as this war drags on. And then other countries are going to ramp up production, and we're going to end up with a bunch of oil, plenty of oil. Oil is going to get cheaper. Problem solved. No reason to further doom it. And it's going to happen after the S&P 500 goes to, 8,200 in October. Because that's where I think it's heading. I put this on Twitter. It's on a chart here. Somewhere here in October, that's where the S&P 500 is going, in my opinion. This is a massive monthly breakout. Everyone's complaining, trying to find reasons why this thing should not be so strong. Well, earnings expectations jumped, which is why PE ratio is contracted, which is why we have headroom. And then everyone who's saying that that's a sign to be worried, well, yeah, it's very worrisome that we're expecting more profits and more revenue and better margins, which, is a crazy way of trying to explain why the price has to come down. It's eventually, yes, because it's going to turn into over optimism. But considering that the smartest, biggest, most expensive companies with the leading cutting edge technology in AI are still about to have their IPOs like this year or maybe next year. and then we have a window after that with lockups, and then a window in which that supply of these IPOs are going to come into the market. And then the question is, how much revenues have grown actually, whether, how long that bubble is going to last, but we have a lot of time. So I think the doomers, I mean, I could be wrong, but I think the doomers are very wrong. I think they're wrong on the war, they're wrong on the, yeah, there's going to be resource problems. Like, you're not going to, if you're going to miss your crop because you don't have the fertilizer this year, there's going to be food shortages. It's not going to stop the market. And that supply chain is going to come back online. And there's countries living on their reserves, but it's going to be close. And I think most countries are going to get away with it and hopefully learn a good lesson that they should not be stupid and have low reserves. So this chart, you're seeing the PA, the forward P ratio prices accelerate, and that's because the earnings are going up. That's not because price is coming down. It's because earnings are going up. So it gives us headway. It kind of gives us a reason to go higher. And if we extrapolate this into my time frame of October, I don't know if I can draw on this. Probably. Yeah. Look, I don't know if we can do like something like this. And then what's this? This is, so October is somewhere here. So yeah, I mean this kind of does align, with my somewhere above 8,000 target, because I think it's gonna start struggling once it hits the 22x again. So I don't think I'm saying anything crazy here. Like, you can draw it on a chart, you can look at these forecasts, you can, look at the price channel that we're in, where you can look at the fact that it's breaking out of it. So yeah, I think October 8th, 8,200 is a good target. And then obviously Bitcoin is going to struggle from there on out. So Bitcoin, the first thing, if you've watched the stream I did with Matt, you would have seen that I talked about the behavioral differences between the consolidation of last year, end of last year, and then the current one. They look similar, but this is where people really fuck up, because they look at something and they see the same pattern, and then they expect the same thing to happen without looking at the context. And the context is super simple here. Is there was massive selling spot from Coinbase and probably other places as well, which stopped around Feb, the beginning of Feb right here. And then it started to neutralize and even become positive again, right? And then the same thing with the cumulative delta, cumulative volume delta, that was down during the last consolidation. Now it went like upward, sideways. It went up first, and now it's sideways, I would say. And then the other things that you would have to look at, and we did, was, this is a point in time where it rejected, and this is the point in time that would have been structurally the same, but it didn't reject. And then the other thing that would have been structurally the same is this. Bitcoin should have, if the context was similar, should have dumped here in this point, but it didn't. It went up. So it started to break a pattern, and it's reflected in the fact that funding was so negative, Coinbase premium flipped, and the cumulative volume delta had a different character. So it's bullish, right? And then the thing we have to look at is, for example, stretch. And I'm not going to explain stretch to you. If you don't know what stretch is, go educate yourself. But the most important thing for you to know, if you don't know what stretch is that as long as stretch stays within these two red bands, it's fucking good. It means a ton of money is coming in every month, and um, prices stabilize, and it means that Sailor is buying a shit ton of money. It's really the simplest math test that a lot of people are failing. So, what happened is very bearish period here, and then stretch stabilized. Stretch stabilized at the same moment in time. The market bottomed out, and these people were gone. They sold. I don't know why they sold. They sold, and that was it. And then Stretch came in and started to buy a bunch of Bitcoin. And basically, in between the dividend events, that's where the front running of the actual dividend event starts. So at every start of the month, here, here, and here, buy pressure comes in. Now, you don't have to be a genius to look at this chart and say, okay, well, everyone's saying it has to break down again, but look, here it faked out, went down, but it kept doing here, and now it's kind of staying above it. And we're right at the point in time where that the stretch demand is going to hit the market again. On top of that, this is the chart I've been sharing, and I'm not much of an itchy guy, but I love it when it comes to knowing whether a turnaround in the market is actually real or not. And the way I use it is very simple. I draw the downtrend line on a linear scale, and then essentially I want to see a few things. First of all, which generally makes things promising, is if the lagging span can actually stay above price, right? So it happened here, but it lost it again. The other thing I really like to see is the lagging span actually getting into the cloud, which happened here. The other thing I really like to see is when these two lines get into the cloud. And then the other funny thing I like to see is when you draw, for example, here you can draw very clear diagonal channels. Needs to get off log. Yeah, this is better. I don't know why it was on log scale. Where the lagging span starts to reclaim, these start to go into the cloud. You have the flip here. You have a clear uptrending. You have a flat Ichi. And now this lagging span is actually, it found support on the diagonal channel. So it broke out of it. It found support on the diagonal channel, but the price is still lagging here. So it's lagging the lagging span. And what it tells me is that we're going to flip this resistance, the diagonal resistance, the horizontal resistance. And I'm not really sure whether that's going to turn out in like a big pump and then some bleed, or it's just going to bleed, and then a big pump. But it makes a lot of sense to me that this is, at least going to retrace into the consolidation of end of last year. But if I'm right about this actually being a true reversal and kind of like an echo bubble, the thing you have to realize is that ETFs have accumulated more Bitcoin than they had when it was here. And then Sailor is adding billions as well. So whoever sold, like you have also like Bitfinex is building a pretty massive like stash of Bitcoin as well. So there's a lot of that supply got absorbed. I don't know if there's any more supply left. And currently the market is showing us that that supply is not hitting the market, or whatever demand there is negating that. So that means we're probably gonna go for a counter trend rally, echo bubble, and then this is why it was on logarithmic, because I like the log 7.86. And it's such a shame that I already had to like record this and delete it, and then now I have to redraw all these things. So it's a beautiful level because it's been support, little fake out, support, and then resistance, and then the whole flush happened. So that's the true level that needs to be tested to see whether the market can find a balance again, right? So that's the ultimate price target that we're looking for, 108. It's super important. That might be the dead cat bounce into something very bad happening if the whole AI bubble and everything and the wars and everything actually come to fruition. But it might just be the October crash that I've been talking about happening from there. And then it's probably going to be something like, this rally is going to remind us of the 2019 Bitcoin rally into the COVID crash. And it's probably not going to be a crash like COVID, but in terms of how it's structured, it might look very similar, where you go to 108 and then have a very steep correction back to, I don't know, 87 maybe, or 80 or whatever, to do the reaccumulation, maybe only to 95. Depends on what we're seeing in the market by then, but that's what I'm looking at. And then I think the other thing that we should talk about, I spoke about this chart, but I'm going to skip it now because I'm getting tired and this is my second round around. Bigger picture, something like this would make a lot of sense to me, right? Into like from a structure perspective, you're down here. You lost the low. You reclaim the low. So you're back in range. So where's the range high? It's here. That's our 108K level again. So you have the over and the under, and then generally you have the continuation. So I think this has just been, this is not a normal bear cycle. I think we're still in the bull cycle. I think the bull cycle that started here is still intact. This is just a larger correction within that larger cycle. And 108 is the level, and then it's going to come back down to, I mean, this would be a beautiful line to find support on. But it could go lower because everyone's looking at the line, and then it comes here and then it rounds up. It might be actually higher if the market is super aggressive, but I think the end result is going to be some kind of correction and then eventually higher after the October crash or correction, whatever you want to call it. The other thing that I would love to look at, let's see, where's that chart, is some privacy coins, because some of these charts are just looking amazing. Again, from the Ichi perspective, I really like it to kind of visualize these turnarounds. There's 100 ways you can use it, but exactly the same things that I described for Bitcoin. Into the cloud, cross, price sustained above the lagging span sustained above the price. You have the downtrend here, it breaks out of the downtrend. And then the other thing I always like when you have these larger corrections or consolidations is the third sweep. So you have one low, one sweep, another low, another sweep, and it reclaims it, and then it starts to actually turn around and start to gain levels. That's usually a freaking great sign for a market to be strong. Now it's above the cloud. here. And I would say that this is very likely to become like a cup and then a handle to form and then higher. So there's good upside on this chart. And I probably spoke about this earlier, but consider that Bitcoin is the only large scale payment network that hasn't been hacked. Like I can hack your private keys, whatever, but the actual thing, the actual network hasn't been hacked, right? Like not in not since its early days. And that inevitably is gonna lead to with AI, once AI gets so good that it's gonna start destroying security, which we're already seeing happening, and it's gonna accelerate. There's gonna be a need to secure and transact for AI agents and humans in a currency that is actually very secure. Not your bank, which is gonna get hacked. Not the fucking European Union who's gonna get hacked. Fucking good money, and then privacy is, in my opinion, um, an additional plus at a much smaller market cap. So, Monero, same story. It doesn't look as good, in my opinion, as Zcash because it hasn't shown a strength yet. But this is kind of looking to me, if we get into the cloud, close in the cloud, it's probably gonna go to the upside of the cloud here, and then at a 0.006, and then it's also very likely gonna go for these highs, have a pullback, and then long the pullback into a long-term breakout, and that's continuation of this trend. So that looks amazing. Plus Zcash, if you zoom out on it a little bit, look at this freaking streamer, and then imagine a continuation of this to the upside. So two assets that are looking super against Bitcoin. And like beyond that, I don't know if I'm very bullish on anything right now. Um, yeah, stuff with AI, and then payment networks, Bitcoin, and privacy networks like Zcash, Monero. Um, I mean, Hype is a steady contender, but I don't think it's like gonna explode like some other stuff. But I could see Hype go to $120 relatively soon. It's did I draw this? Apparently I did. Yeah, I think Hype is gonna go to the highs here, consolidate a bit more, and then actually pull another leg higher. But I think we ran long enough. I've been a bit rusty. I will be trying to kind of condense the information that's all in my head into some kind of a layout that's a bit more easy to follow. Now it's just me brambling, and it's kind of cool to do that. But I think it would benefit to structure it a little bit more. We're gonna do live streams, and this is let's see, wait. So I created this streaming layout. So we have the starting soon. We have the intro page. What? Chart cam. Probably gonna do some interviews as well. So we're gonna do that in here. If I need to take a shit, I'll use this one. And probably we'll have to figure out how to exactly hook this up, but I think it would be cool to do like Q&As with the chat or something on YouTube or on wherever. And then I think we're just gonna end it here with the outro. So I see you next week. Probably gonna do these on Sundays at 10 p.m. European time. If any one of you think that's not the greatest time, just let me know why. Maybe normally I'm in bed by now. And then So maybe a bit earlier might be nice for me too. But it's Sunday evening at 10 is quiet. There's not much going on. It's the market open. That's almost around the corner. So it's like a good time to review the market, I guess. So yeah, let me know what you think. I hope you enjoyed that, and see you soon.